This is the June the 6th, and just want to have a kind of review of the gold chart. I've been following along this on my last video. I mentioned we get a down move, which we did yesterday. We saw this break of this key level, 1691, key level of support here, and support here. So we're going to look at the 4-hour chart. Now the 4-hour chart has got potential stopping volume down here. I want to see this up move capped by 1691. What I would like to see is even potentially a small poke out through here, some small weakness, and then a down move in to test this 1660 area. If we get above 1691 with a daily close above 1691, we can say this potential stopping volume here on the 4-hour could actually work out to the upside, and that this daily chart here is just a shakeout. So we can say that this is just kind of a testing the market, and although there's a lot of issues in the world still, COVID's not gone away. We could potentially, if we do get a close above this 1691 level again on the daily chart, we could say that this is a kind of a sign of strength. Now, depending on how big that move up is, okay, I'm thinking we come to this 1660 area at least though, and test that. So I want to see this 1691 capped with signs of weakness on up moves, and I'd like to see a test of this 1690 area in the coming days. I'm not saying it's going to happen Monday, but we had a pretty decent down day on gold on Friday because of the better than expected unemployment rates and the NFP. So gold is definitely, but we're still, gold definitely took a nice down move, but we're still in this, is basically this sideways channel here until we break this 1660 area. If we break this 1660 area, we can say that this distribution that we've been seeing here is going to lead to a fairly substantial down move to the 1494 area. First of all, we've got 1583 as 1585-ish as a support. Let's say 1590 round number as a support level below us, and so that would be the first target. It's a pretty decent 600 point down day, and then 1588 to 1494 would be the next kind of move, depending on the strength of the down move. Now, this isn't going to happen overnight. I don't think it's going to happen like it did here within 1, 2, 3, 4, 5 days. I don't think that's going to happen. I think this will happen slowly. Gold is a bit more orderly in the last 7.5, 8 weeks. Days are like $25 days on gold, but that still gives us an opportunity as day traders or intraday traders, as I am. I'm an intraday trader. I'll take one position, hold it for the trend of the day if I can find a trend, and so it's pretty good for us intraday traders because we can still make about $10 a day on gold. For swing traders, if we can get in a weakness or at 1691, and we can hold this and put a stop above, maybe above the high of this daily bar here. It's a wide stop. It's a bit of risk, but if we saw a sign of weakness here on an up move on the daily charts, we could put a sell stop underneath that up day. And we could say, okay, let's hopefully this will come down, take our sell stop, and then continue down into 1660, at which point we could get a stop in there, and then hopefully this thing would then just drop down to 1588. I normally, in the room, Trades for Freedom, I normally intraday trade, just because the markets are volatile. Some days they're good, some days they're bad. Sometimes it works against me. You could miss good moves in the market. But I aim to make about 500 points a week between Dow, DAX, gold, the pound. So it's kind of what I try and do, and I don't catch all the moves, but consistent moves. So basically, this particular chart here, we were underneath the daily pivot on yesterday before the news. The news was 19% of unemployment. There's no way that COVID is going down. And there's no way there's 19% unemployment. COVID is reducing a little bit in the US. Things are opening a little bit. The peak of employment would have been the first 1-2 months after lockdown. We're now into kind of month 3 over in Qatar. We are anyway. And the So there's no way the unemployment rate was going to be 19%. So this could potentially be a trap move, to move gold lower and to move the markets up. Dow did an 800-point day today. The market doesn't like widespread up bars, so we're going to see what the reaction to that down move was on Monday. We'll probably see a consolidation day. But what I'll be looking for gold coming in on the next session is I'll be looking for a breakdown below this kind of level, 1680 level, and that will come down and probably test the 1669 level. We might see an up move to 1691 in Asia. I want that 1691 to hold. Ultimately hold or have a peak up on the 4 hour above that, and then supply entering the market to drive it back down to below this price, 1691. Gold is tricky. We have to be patient with it. It's very tricky intraday. You have to kind of wait for your entries, kind of like you have to be like a sniper just hiding out in the bush, just waiting for his target. So that's kind of how gold rolls. We do have this kind of no demand here, okay, on the 30-minute here, which is pretty decent, but we did get a bit more of a rise above that. So that's why I've put this level at 1680, because this is potential weakness here, and it's also below this kind of supply bar here, this one, okay. So that's kind of what I'm thinking. 1680 sells, retest of 1691. I wouldn't be buying this right now. I'm sure many people are long on gold at the moment. They probably bought off the bottom here just because it's a bottom. That's what traders do, and that's why they always get hammered. They some of them take risks, and they're calculated risks for them. They move their stops to break even. So anyone who bought this bottom now has probably got their stop to break even already. I just kind of let this roll up here and then see what happens in this zone on Monday. So that's it. Have a good weekend, traders, and stay safe out there.